Good evening, everyone. Brian Hoops here with Midwest Market Solutions and our latest installment of our internet video series. It's Tuesday night, August the 12th. It's crop report day, but I thought we'd talk mostly about crop reports, but now with the livestock acting the way they are, I think we need to focus on that market and talk a little bit about some of the grains. But hope everybody is having a good summer and a good month since we talked to you last. Now, before we get started, remember, the risk of loss in trading futures and options is substantial, and each investor and trader must consider whether this is a suitable investment for them. Past performance, whether actual or indicated by simulated test strategies, is not indicative of future results. Trading advice is based on information taken from trades and services and other sources that Midwest Market Solutions believes are reliable. We do not guarantee such information is accurate or complete and should not be relied upon as such. Trading advice reflects our good faith judgment at a specific time and is subject to change without notice. There is no guarantees that the advice we give will result in profitable trades. And everything you see here in our internet video series is copyright 2014 Midwest Market Solutions. Alright, I'm pulling up some charts here, and this is a chart of October cattle. A couple things from a technical standpoint we're going to look at. And let's start with this cattle market. Here I have drawn a trend line off of the lows from January, found a low here in April, and it shows a trend line down into this 144 area for October cattle. We're a long ways away from that. But if you draw a little bit shorter term trend line from the April lows, the May lows, you can see yesterday we reversed off of this trend line and closed higher, and now we closed below it here on Tuesday the 12th. Couple other things I want to mention here, and this is important in looking at technical analysis of markets. If you notice back here, anytime in this rally that we've been on since going back to late November, early December, one thing that stands out is we've never at any point taken out the previous month's lows, and this rally has just continued. You notice here we had some support, but the lows for the month was actually in May, was actually 140.02. We came down close to it, but never took it out. Same thing here in the April time frame. The low was 136.57, and you can see that up in here where I'm looking. 136.57. The low for the for later on the month, 136.82. So we came close, but never took out the previous month's lows and continued the rally. We don't have that same thing going on here in July and August. The lows for the month of July, 149.45 from this day right here. There's your support area. We came close to it, opened lower Monday, and then rallied. Now this is a reversal. This is called a hook reversal. Not an outside reversal, outside day, because you don't have an outside day, but you open, in fact, a gap lower opening, and then rally back. Now, a couple of the Larry Williams S&P systems are predicated on this signal, where you open lower, flush out your sellers, and then rally back. But we didn't get any follow-through. On Tuesday, the 12th, you see this day we opened actually a little bit softer and continued to weaken throughout the day. By the end of the day, we took out the swing lows, we took out the trend lines, and we closed at new lows for the move. Definitely lower than the July lows here in the month of August. So bearish technicals here in this area and below this trend line. I think the next chart signal we're going to see, if we look at the next daily chart, you're going to see a gap lower opening here and likely a fall to at least 144 in the October cattle. Now the argument is cash isn't going to fall that far, boxes haven't fallen, all those fundamental reasons are true and accurate. Right now we're looking at just the chart patterns in here and no change in the fundamentals. It's just technically based. The funds are big buyers. The technical trend following funds are looking at these charts tonight and making their decision that they don't want to be long anymore in this cattle market, and they're going to get out until that trend goes back higher. We need some more proof. Let's look at hogs. Same fundamentals can be said about the hogs. It is a bullish supply market. Prices shouldn't move much lower because of tight supplies. Cash is going to be strong. All very true, but yet prices have fallen over $20 from their high back in July. Here we have a nice trend line from April found a low here in June to draw the trend line off of, and look, we've stopped right on the trend line or just a little bit below it, a gap lower the next day, and continued selling without any attempt at any type of a rally here. And in fact, we're making new lows on today, August the 12th. If you notice, right here is July 22nd. Again, look over here while I'm pointing at things, and you can see the prices. Here is the 22nd of July with a low of 111.15. We opened lower than the previous day and then rallied back to trade higher and close higher that day. We didn't get any follow-through buying on July the 23rd. In fact, we opened on basically the highs of the day, weakened throughout the day, took out the support, and that was pretty much it from a technical standpoint. Down we went. If you notice also, the same feature as far as an uptrending market. We never took out previous month's lows in hogs on this whole rally. Here's lows, never took them out. Here's lows for the month, never took them out. Here's the low for the month of June, never took that out. Here is the low for the month of July, but we took it out here in July 23rd, and at that time, prices gap lower. Now I think you have to say we're in a downtrending market. In fact, if we draw a trend line, let's go off these highs. There's your trend line showing us that you're in a downtrend where you have to get above to break that trend line. All right, another market I want to look at is feeder cattle. This is a more bullish market, I think, than live cattle. You draw a trend line off of your January lows, your March lows, your May lows, or April lows, excuse me, so you've got a 3-point trend line, projects down to this 202 area. Here is your lows for the month of July, right in this 208.80 area. So if you are a technician, mark this down, 208.80. That's going to be a key support area. We have not broken this support yet. This is a reversal. Same thing happened to the cattle and the hogs we talked about on Monday, the 11th. We gapped lower on the opening and then rallied to close higher. The 12th here, we had an inside day. In the electronic overnight trade, we're lower than this. I don't think we gapped lower, but we are trading lower, and we're falling down in this area. But 208.87 is a key. This is watch for support. A break of this should set off all kinds of selling and come down to at least, I would say, in my estimation, this 201.22, despite tight supplies and the bullish situation in the fundamentals of the cattle market. So bearish technical action coming here last couple days, more bearish action right here at this 208.90 area roughly in October feeders. And you can look at any chart, November here, same type of thing. You'd be looking at 208.02. You get below that, and I think you're changing the trend here of this feeder cattle market, at least on the near-term charts. And longer term, you know, markets can always trend back up, but near term, we're going to see some selling. A couple other markets while we're talking. Let's look at December bean oil. New contract lows in here in the bean oil. Continued downtrend in this bean oil market. Look at December corn after today's close. Through this little channel pattern in here, corn definitely not trading an uptrend. Really, you can't say it's a sideways pattern because we made new lows here, we made new lows today before rallying, and we're not making new highs. We're rallying up into this trend line today. The high was almost directly into that trend line, that downtrending channel right in here. So where do we have to go to get an uptrending market in the corn? Well, we get above 378. This is a high right in here, July 28th. That could be a kind of a key area. Here's some resistance, support and resistance line, and look how it closely intersects with this downtrend line I've drawn in here. So I think you watch this trend line for signals that if we would start to see a rally above 78 to 80, 83, very likely the lows are in for the corn. We're going to take off and rally, which certainly wouldn't expect ahead of this huge crop that we're harvesting. But if you look at the charts, major uptrend line right here, we broke it, consolidated on May the 12th, and obviously have never even come close to coming back to that area. And if you want to look at monthly lows in an uptrending market, we never took out monthly lows, never took out monthly lows here. Here was the lows were established for April at 487.5. In May, when we took that out, you can see, boy, we never came close to challenging anywhere close to coming back and making new monthly highs. So that'll be something to watch in August as we look for some sort of a bottom in September and October. But for August, to say we're breaking the downtrend, you have to get at least to this 83, and take out the previous month's highs. You're looking at 423. So you got a ways to go, and don't see that happening in the corn. All right, you're looking at wheat from today. December wheat pretty much held steady with its previous lows. Kansas City December wheat did make new lows, but held these lows so far. So weekly charts are still holding in fairly well on that market. Okay, I think we've talked long enough here about charts and trends of the market, but it sure looks like feeder cattle entering the same phase as what the hogs are at this time. So we're going to sign off here. Hope you enjoyed this. Give us a call. We can help you out, get your account open, talk markets. This has been Brian Hoops. Have a great evening, everybody, and we'll talk to you again soon.